Hey everyone, welcome back to Corporate Decoder. Today we are diving into some financial reports, and I promise it's going to be more exciting than watching paint dry, or maybe not, because as they say, the devil is in the details. Let's see if there is any devil. We are looking at Eaton Vance Short Duration Inflation Protected Income Fund. Yes, it's a mouthful. This is their semi-annual shareholder report, which basically tells investors how their money is doing between November last year and April this year. Think of it like a progress report card for your investment. The basic summary is, here is what your fund cost, how it invested, and what were the results. Let's see what's under the hood. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for discussions on corporate financial filings. Join us there. First, everyone wants to know about costs. How much did it cost to manage your money? For the Class A shares, for every $10,000 invested, it cost about $51 over the last 6 months. That's about 1.01%. Class C shares were a bit pricier, costing $89 or 1.76%, and Class I shares had lower fee of about $38, or they will last 6 months. That's about 1.01%. Class C shares were a bit pricier, costing $89 or 1.76%, and Class I shares had lower fee of about $38 or 0.76%. And Class I shares had lower fee of about $38 or 0.76%. And Class I shares had lower fee of about $38 or 0.76%. And Class I shares had lower fee of about $38 or 0.76%. And Class I shares had lower fee of about $38 or 0.76%. Now, it shows the percentages annualized. Annualized means that this percentage represents the fund's expenses if they were to stay the same throughout the entire year. Also, the filing tells us that these expenses include the costs of some portfolios in which it invests. These portfolios include short duration inflation protected income portfolio and senior debt portfolio. Next, let's look at some key statistics. The fund's total net assets, that is how much money it has, is about $498.3 million. The fund invests in a wide mixture of investments as it has 714 portfolio holdings. The portfolio turnover rate, which represents how often the fund buys and sells securities, was 11%. A higher turnover can sometimes mean more trading costs. So where did the fund invest your money? A large portion, about 69%, was in US Treasury obligations. Senior floating rate loans made up about 21.5% and short-term investments around 4%. Other holdings include asset-backed securities at 1.1%, corporate bonds at 1.8%, commercial mortgage-backed securities at 2%, and exchange-traded funds at 3.9%. Corporate bonds at 1.8%, commercial mortgage-backed securities at 2%, and exchange-traded funds at 3.9%. The fund also had a little bit of other assets and liabilities that come out negative 3.3%. Now, the document tells us we can visit a website or call a phone number to request and see all these investment documents. Also, it tells us that the funds may deliver a single copy of certain required shareholder documents to investors with the same last name and the same address, meaning that if you and your family live at the same address and invest in the same fund, you will all get one copy unless you tell them otherwise. Let's dive into the financial statements. First up, the statement of assets and liabilities. On the asset side, the fund's investments in short duration inflation protected income portfolio are valued at approximately $398.9 million, while its investments in senior debt portfolio are valued at $97.7 million. The filing also includes smaller parts of the total asset pie, such as receivables for fund shares sold, around $1.9 million, and receivables from affiliates, $74.5 or $90, and receivables from affiliates, $74,590. After subtracting all the liabilities, like payments for shares redeemed and fees owed, the total net assets come out to $498.3 million, in line with what we discussed previously. Breaking that down by share class, we see that the Class A shares have about $73.7 million in net assets, and Class C has around $17.8 million. The big guy is Class I shares with $406 million. The statement of operations really digs into the money flow. Total investment income was around $9.9 million. This comes from some items related to our aforementioned portfolios, but we can also see it breaks down into dividend income and interest income. After subtracting all the expenses, most importantly from distributing fees and trustee fees, The fund had a net investment income of around $9.8 million. Now, it tells us that about $47,759 of expenses were waived, meaning that the balance was paid by either the portfolio or an affiliate. But the other side of the money flow includes realized and unrealized losses coming down from those portfolios. After factoring in these aspects, the net increase in net assets from operations was about $17.1 million. Moving to the statements of changes in net assets, we see how net assets changed over time. Net assets increased by approximately $63.2 million during the 6 months ended in April, ending the period with total net assets of $498.3 million compared to $435 million at the beginning of the period. The financial highlights section gives us details on how each share class performed individually. For Class A shares, the net asset value at the beginning of the period was $9.98, ending at $10.99. Their total return, which assumes all distributions are reinvested, was 3.74%. The ratio section tells us some figures like the total expenses represented 1.17% of the average daily net assets, while the net investment income comes down to 4.27%. We can also see the same ratios and figures for Class C and Class I. The report also includes the portfolio of investments for the short duration inflation protected income portfolio. The top holdings are obviously US Treasury bonds and notes at approximately 86%, as mentioned, Eaton Vance's own short duration income ETF or ultra short income ETF. These are followed by a smaller allocation to asset-backed securities, commercial mortgage-backed securities, and short-term investments. The notes to the financial statements dive into some very specific accounting policies discussing topics like how asset values are determined, how income is recognized, and the handling of federal taxes. They also touch on what happens if someone sues the company. It also breaks down the investment advisor fees, explaining how Boston Management and Research, an affiliate firm, receives compensation for their services. They also mention some reductions to these fees based on investments within affiliated funds. They also mention that there is a line of credit of up to $650 million for short-term cash needs. On concluding these sections, we can summarize what we read so far. So, what's the big picture here? Eaton Vance Short Duration Inflation Protected Income Fund seems to be managing a pretty substantial amount of assets, nearly $500 million, investing conservatively mostly. While some share classes are pricier than others, and you should consider this in your strategy, the overall returns and investment strategies appear aimed at protecting investors from inflation. A conservative investment strategies appear aimed at protecting investors from inflation. A conservative investment strategy with an emphasis on inflation protection. Alright, that's our breakdown of Eaton Vance's latest shareholder report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.